Giles, welcome to Wealth Talk today.
Hi, Christian. Thanks very much for having me on.
No, very good to have you. Now, would you mind just giving our listeners a bit of a background as to yourself and to your company, Sharps Pixley?
Yes, certainly. I've worked for Sharps Pixley for 4 years now. My background before that was working in corporate finance for an investment house called Baker Steel Resources. And they actually invested in very early stage development mining projects worldwide, including some precious metal projects. But I wanted to get out from behind the sort of financial valuation methodologies and focus on something a bit more client facing. So this position became available at Sharps Pixley in the precious metal sector. So I thought, why not let's move to the other end of the spectrum and help people invest in something more solid.
So for anyone who's perhaps not dealt with a bullion dealer before, give us a bit of background. What's kind of a typical. Hold on, let me go for that again. So for anyone who hasn't dealt with a bullion dealer before, give us a bit of an understanding as to how it works.
Sure. So, I mean, firstly, clients come to us and really there's no investment minimums or maximums. We look after, clients who are looking to invest, £10,000 or clients who are looking to invest, family offices who are looking to invest sort of upwards to £20 million. Clients reach out generally to us. And I think the thing that makes Sharps Pixley unique is obviously our physical presence in London. We're very much of an old-fashioned mindset, if you like. We put sort of customer service and face-to-face meetings at the forefront of what we do here, rather than just trying to encourage everyone to use our online shop. And I think that's probably one of our weaknesses, is that our online shop is probably not as effective and what should I say, just as good as it could be, really. But that's all because we encourage people to meet us and to come form a relationship.
And gold is an unregulated asset class. So what's some of the governance around in that industry, Giles?
Sure. I mean, I think, luckily I work for a company which has a name in precious metals for over 200 years now. We have a reputation and we take that very seriously and a bit of heritage there as well. But mainly, it's called the London Bullion Market Association. Now, this is the industry body which governs what we do, but it governs the whole market. So it really looks into the practices and manufacturing techniques of all the refiners globally as well, to ensure that the gold is of the highest purity. So Sharps Pixley only offer our clients gold bars from, it's called an LBMA accredited good delivery refinery, which can be abbreviated as to GDL. So if clients are looking to buy a gold bar, ensure it's from an LBMA accredited refinery.
Okay, so let's start looking now at some of the things that makes gold such a strategic asset, Giles. I know you've got a few different points. So what would be one of those bows?
Sure. I mean, I think, firstly, gold is relatively scarce. We all know that. I mean, if you look at the global mine production each year on gold is about 3,400 tons. This has only increased by about 1.6% year on year for sort of the last 50 years. So the supply of gold is scarce, firstly. The demand for gold is ever growing, particularly on the investment side. I think that's really down to emerging markets. Obviously, we're thinking of China here, who are now a huge consumer of investment gold. With those developing markets, in good times, there's also a lot of people buying jewelry. That's usually the sign of a buoyant economy. People have a little bit more money to spend on jewelry. And India, of course, they buy jewelry as an investment form for them of gold. And you can always tell how productive the agricultural, the farming season's been in India, because all the rural population travel into the cities and buy a lot of gold if they've had a good season. So I mean, we've covered there's a luxury good. We've covered it's got a scarce supply. Obviously, it's used in technology as well, so there's demand for it there. And of course, it's used as a sort of a hedge against market uncertainty and systemic risk. For us here at this company, that's what we do. And there's gold has always had a history of preserving its wealth over time. Fiat currencies debase over time, and we're seeing that more prevalent than right now. But everyone's heard the sort of the anecdote that an ounce of gold in sort of Roman times would buy you a suit of armor, and it's still just about buys you a suit of a suit on Savile Row here in London, if you're lucky.
Yeah. So I actually put a post in the Wealth Builders Facebook community last week, Giles, to let people know that I was speaking with you, and we had a few questions, and I just want to dip into a couple of those now, actually. And the first one was from Dave Ford, and Dave was asking why the stock market has been dropping recently, and there's been a corresponding drop in the gold price, and in times of uncertainty, he would expect a proportional rise in the price of gold.
Yeah, I mean, he's absolutely right. And this is a question which a lot of our clients have been asking us recently. I think, this probably started more in March and then the beginning of April, when we saw, an all-encompassing mass market liquidation. Everything plummeted as obviously we entered lockdown, and there was huge uncertainty in the economy. And why gold also, started selling off is ultimately that, if you consider there are a lot of portfolio fund managers out there who have equity positions, and when those equities decrease and fall very swiftly, they get margin calls. And then the fund managers look at what's their most liquid, profitable position that they can sell off and to cover those margin calls. And that's when they think that these positions are going to recover quite quickly. Now, we saw an awful lot of that at the end of March. And suddenly the gold price was down at $1,450, having been up at $1,900. So that's really what drove all markets in the same direction. And then we had this sort of V-shaped recovery, as of course we saw these mass fiscal and monetary packages being released to try and combat COVID. So that suddenly brought everything up in the same direction at the same time again. But more broadly, what I would just ask your listeners and your members to consider is to try and avoid looking at sort of short-term movements and focus on longer-term trends. Now, what I mean by that, and I'd happily send it to anyone and perhaps to David as well, is some research that Bloomberg, or the data which Bloomberg brought out, looked back at the correlation between gold, US equities, international equities over the last 20 years. So this is actually quite of the moment. It was published just at the end of September. And the correlation over the last 20 years for gold to US equity is actually 0.05. So that shows that gold is doing its job as a diversifier. And, apart from this short-term period, and perhaps it's also due to sort of reflationary times right now as well. I think, that comes with what I mentioned about the monetary and fiscal stimulus. But, right now, countries are doing whatever they can to try and sort of dig ourselves out of this hole.
And we are just a couple of weeks away from the US election, which is another kind of hot topic, right? How's this going to affect gold?
Yeah, I mean, it's the most pressing question right now. Clients are clamoring as to which result's going to yield the biggest increase in the gold price. And I think that, it's interesting, isn't it? I mean, Trump obviously has been good for gold prices over the last, few years. Let's not forget that he almost started a war with Iran. And of course, his sort of ongoing war with China, slightly different themes. But Biden, for me, and if you look at a lot of analyst reports as well, they'll sort of hopefully support what I'm saying. Biden's promised such mass fiscal spending over his term. He's throwing a figure of something like $9 trillion around, which, of course, people do throw these figures into thin air. But I think that the scale of the stimulus package that we see will be greater immediately after the election if Biden wins than if Trump does. So I believe that will only increase what we're seeing with this recovery. I don't think it'll be sustainable in the long run. Whether it'll be 6 or 12 months, who knows? But I think in the short term, all asset prices will rise considerably. So I think that Biden will be better for gold in the short term than Trump, than a Trump victory.
And are there any other factors that you think can contribute over, when we look at 2021 in terms of the price of gold?
Well, I mean, I think, what do investors look for when they're investing in gold? They're looking at, interest rates. That's been the main driver for gold over the last few years. And, we are now in a period of sustained low interest rate. If you look at inflation, the ECB has their target of 2%. I think we're a little bit above that at the moment. And then you've got the interest rate at the moment at 0.1. Now, what that means essentially is that you've got a negative real rate. Now, this is interest rates adjusted for inflation. So if you've got a £10,000 saving in your bank account, in your savings account, you're essentially losing 2% of that per year at the moment. Now, that is the most strong driver for gold prices that you'll see. Now, the opportunity cost of holding your money in the bank is obviously significantly less, and not only that, but bond yields are significantly lower than they have been as well. So when you're looking for an efficient diversifier over the next, I'd probably say 3, 4, 5 years, I don't think you need to look much further than gold. I mean, if we look at just talking about interest and debt, particularly in the US, I think their fiscal interest payment at the end of September for the year was $522 billion. Now, that's only going to continue growing. And if you throw in their spending on defense as well, you're already at 1.4 trillion. So if interest rates do start increasing, then it's just hard to imagine how they're going to stop this sort of stimulus and printing, increasing the money supply exponentially.
So I'm going to come back to a couple of other questions that we've had posted in our Facebook group, Giles. And next one's from Jeff Sturtevant. Jeff's asking, is it true that bullion vaults work on a fractional reserve principle like the banks do with money, where the gold you buy and own is actually resold to another buyer, working on the principle that all gold owners would not ask for the delivery of their gold at the same time?
Okay. Well, thanks, Jeff. It's a question. It's a good question. It's probably a question which no one knows the actual truthful answer to. I mean, look, here at Charles Pixley, we only offer clients allocated and individually segregated metal. Now, we also offer you inspection rights, so you can come and audit. You can hold your own bars, take pictures with them, do whatever you like. That metal is yours. It's here. So there is no counterparty risk, if you like, for you when you invest in Charles Pixley. Going back to the larger banks, there are a lot of conspiracy theories, last year, I think I read a piece of research which said something like for every ounce which was supposedly backing an ETF, it was also lent to about another 8 ETF holdings. So not all ETFs are the same. I can't state that strongly enough. I think picking the correct one is, of course, important. But I think gold should be considered as the ultimate hedge against systemic risk and market collapse. And with that being the case, the old adage that whoever holds the gold makes the rules will always ring true. Right? So we're offering, and you have the option to do this with anyone else as well. But please do consider owning some physical gold because if you can't touch it, you don't really own it.
Mm. And how does it work with kind of insuring that and the vaulting aspect, Giles?
Sure. I mean, all of our holdings are fully insured. We are underwritten by Lloyd's of London, so that's one of the questions which clients ask. So, what happens if your underwriters collapse? Well, we use the biggest and the best, and if Lloyd's of London collapse, then the world's really going to be a darker place. So we offer vaulting and insurance from 0.3% per annum, and that's inclusive of VAT, which is a very reasonable and competitive rate, we feel.
Mm-hmm. Okay, another question is from Stephen Hall this time, and he's asking a question that's probably very relevant for our listeners, and this is how to invest in gold via a SSAS pension. So what products can be held specifically, Giles?
So according to HMRC rules, clients can only hold gold bars of a purity greater than 995, which for us, we only offer you bars which are 99.99% pure gold. And as I said, from the accredited LBMA good delivery refineries. So it's very straightforward. We have an application form which trustees complete with their pension providers, or their scheme provider, I should say, and return it to us. The account can be opened within 24 hours usually. And then clients also have an online portal access where they can sort of review and also manage their account. So if they want to buy more, sell more, they can do so all from online. But I'd always encourage clients to give me a ring and do things over the phone. Voice execution usually yields a slightly better price.
Mm. So I guess finally, Giles, is there anything that our listeners should be kind of looking out for when they're thinking about investing in gold? And obviously, another comment actually within the Facebook group was there are some potentially dubious schemes that you see out there. And, how do you do the due diligence? Obviously, working with someone reputable like yourself that's got the trust and the background that you do have. Any kind of other tips for people just to make sure they avoid any costly mistakes?
I think that's it. I think that reputation counts for a lot, certainly in my book, and hopefully everyone else's. Our clients and hopefully your members are considering investing an awful lot of their hard-earned funds. They want to make sure that it's safe, and I always encourage people to have a good relationship with the outfit that they choose. For me, I don't think it's right that generally clients commit to large investments over the phone. I would always encourage you to come and visit us. Of course, that's been made more difficult this year due to COVID, but thank goodness for Zoom and other providers, of course. I think that you just need to feel safe and trust the outfit who you choose to use. I think obviously nowadays there's a review on every company out there. The customer service is absolutely crucial. And the things you need to look out for, as I've mentioned, are that you're buying gold from a reputable refinery and that you can always sell it back to them. We offer clients, one of our unique selling points, if you like, is that we offer a buyback guarantee on metal we've sold, and we'll always buy it back. And it's incredibly liquid. If a client phones me and says, Giles, I want to sell a kilo of gold, within 10 minutes we'll have instructed a bank transfer back to his account, and the funds, if it's a UK account, will arrive within the hour usually. So it's incredibly quick and liquid. Mm-hmm. I think that goes back to sort of talking about counterparties. You want to make sure you're using a firm who have got the financial resources, even in times of significant market stress. And what I mean by that is, let's say we do see gold prices rally next year, and suddenly people decide that the world's looking great and the economic outlook is suddenly favorable, and there's a lot of selling, for gold. You want to make sure that you're using a company who can manage the liquidation process without delay. And for us, Charles Pixley, we are actually owned and part of the Degussa Group, which is Europe's biggest precious metals retailer, dealer. And that gives us institutional scale, service, support and pricing, which we can pass on to our clients. And I think that it's really important to delve into the background of the company that you're investing with.
Giles, thank you very much for sharing with us on Wealth Talk today.
Pleasure. Thanks, Christian.